Good afternoon. Welcome to the TheoTRADE afternoon video. I'm Blake Young. Today is December 5th, 2024, and we're going to talk about consumer discretionary and energy in a very light volume market. So to start with, I've got the S&P 500. And what we have down here at the bottom is average volume and 150% of normal volume represented with this red line and green line. There's two things I want you to note before we get into consumer discretionary and energy. The first thing is the average volume has had more bearish days above average volume than bullish days. In fact, going all the way back 2 months, you can see we've had 1, 2, 3, 4, 5, 6, 7, and I'd say maybe 8 here, as far as higher bearish days, higher volume bearish days, and we had 1, 2, 3, 4, 5, 6, 7. And multiple of those are barely at average. So that's the first thing, is that we have more bearish volume days, or volume days were higher than average on bearish days. And then additionally, I want you to note that the volume is declining and has been declining throughout the year. We've had a lot of volume in December and January of last year. And then from there, peak January, first week of January, we have never returned. The volume we've dealt with in 2024 has got less and less and less. S&P average volume back in January, the first trading weeks of January, we had about 89 million contracts, or 89 million shares average daily volume on the S&P 500, the largest ETF in the world. We've dropped and dropped. We've put a low average here. We made another lower average here, and today we make an even lower average volume. So this is the lowest average volume looking back 10 trading days, 2 weeks of average volume. This is the lowest average trading volume that we've seen all year. And that compares to last year at this time, where last year at this time we were at an average of 64 million shares traded a day. Today we're at 35 million average. And not only that, but today's volume is half of average. So we're not only half of average from a year ago, we're half of the average. So we're at 1/4 of the average trading volume that we were a year ago today. And as we're looking at this move higher in the market, we know that that is on lighter and lighter and lighter and lighter volume. As you can see, this average is again sliding down as we're pushing to these highs. So today's move, putting in a new 52-week high shadow, it is on 50% of average volume, which is 1/4 of the volume it was last year at this time. There is no one here. Someone forgot to turn the lights off when they left. The market's still open, but apparently there's no traders out here and we have no volume really pushing this. So the fact that we've had this failure to see support with volume makes this breakout and this rally suspect. It will not take a lot of volume to push this down. You can see average to high volume here caused that drop from 600 all the way down to 583. Could we see a 17-point drop, which is 3%? Sure. We just need the high volume on some down days, and it could easily drop 3%, 6%, 9%, and 10%. But if we're looking for something bullish, and referencing what we talked about in the main room at TheoTRADE today, we can look at cash flow of those stocks inside of the high performers today. We know we don't have a lot of volume today, so I'm looking at consumer discretionary and energy. We know that technology sold off towards the end of the day today. But if we look at consumer discretionary and energy, and we're going to ignore Tesla because it's too large of a component of consumer discretionary, we can look for those that have good cash flow. So let's take a second, and I'm going to show you how to run a quick scan, and then we'll look at some individual stocks. To create the scan, what I've done is I've ignore what this title is because I just cleared it all out and started again. I want stocks above $15 a share. I want at least 500,000 trading volume a day because we need volume. I want option volume to exist, and I want some implied volatility to be there. So I use 17 minimum contracts, and we could use 20. But that's not the key points. $15, 500,000 shares, some volatility, and some volume in options. Penny increment options. And right now we're going to start with consumer discretionary. So we're going to search for consumer discretionary. And then I put free cash flow above zero, so 10 cents per share. Free cash flow above zero. Now I ran the scan and there's 40 stocks that meet the criteria. You'll notice Nike, which we talked about today in the main room as an opportunity to buy, is at the top of the list, followed by Lululemon. There's Tesla. Like I said, I'm not going to spend a lot of time on Tesla because it is the one lifting the rest of the consumer discretionary probably a little more aggressively than it should. But we're going to look at Nike, Lulu, Lennar, which is housing primarily. But we can look at Macy's and Kohl's and GM. So let's take a look at those really quick. And as you can see, we anchored this earlier and we're at the exact same price. It's crossing back and forth across its Bollinger Band, a single standard deviation Bollinger Band. I'm expecting Nike to go up to 82.60 and then potentially not only up to 86.59, but probably to fill the gap near 89. Nike has positive cash flow and has been knocked down a little lower than it probably should. Lululemon, higher highs, higher lows. It's been in this channel for a while. My only concern is that we do have earnings today after the close. It's pricing in some more bullishness. I do think you're going to get at least an overnight lift and probably testing up to 358. But that is an earnings trade. You'll have to take a look at that and consider whether you want to do an earnings trade on it. Lennar is housing, so I'm not too worried about that. Even though it's considered part of the consumer discretionary, it's still lumped in there. Macy's broke out of what I would consider a double bottom back here, and that would be looking for a move from 14 to 16.50, so about a 250 move, and we will call that 12.5% rally. And this is simply retesting the lows. I'm not too concerned. It's already past earnings, and I think that could lift further. GM, I'm going through these fast because these are all potential setups of retesting a barrier and having a low cost potential trade with something that has free cash flow in the consumer discretionary area. So GM, I would like to see this bounce higher because it is at the previous resistance area, and I do think it was being adjusted down for this dividend. So watch for maybe a 12-cent pullback and then a bounce above 54 to take GM higher. Kohl's I don't think was strong enough for a setup, but Chipotle broke out a couple days ago. We anchored this on the breakout, saying we cleared the highs, higher lows, and I have a target for Chipotle at about 67.5. And that's a solid 5% rally, and it could continue to go from there. One of the ones that we haven't put in here, which does have good cash flow and good free cash flow, is Amazon. Amazon is primarily Amazon Web Services. We know that there's a bigger component in the advertising in Amazon Web Services, but being the holiday shopping season and being able to see the many boxes that get delivered to my house, I'm looking at Amazon and saying, yes, this is also a consumer discretionary play. We made higher highs, higher lows all the way through here. We broke through the high yesterday. Even if it just repeats this move, we're talking about 196 to 216. That's another 10% move from that breakout. I'm looking for this to get up to about 36 to 40, 236 to 240 over the next 10 to 20 days. And all of these are going to be lifted by that free cash flow and the fact that it is the holiday shopping season. We're driving money into that consumer discretionary area. I've commented that I like oil in this $68 a barrel range, and that's going to feed to some safety and protection against this pullback in energy. Now, energy's pulled back into this gap area. It has defended, has not closed below that area, which could bring us back down to 90. But today's giving us an inside day or Harami setup, which would tell you if you're trading XLE, you might want to see it finish today and even trade above today's high as confirmation. And that would take you from 93 to 96. You're talking about maybe a 7-8% move. But the individual stocks inside of here, we do the same scan. If you go to the scan and just change it from consumer discretionary to energy, and we're looking at the largest volume stocks. We have ET, KMI, XOM, and Oxy. Starting out with ET. Energy Transfer LP. Keep in mind, don't do this in your retirement account if you are concerned about UBIT, unrelated business income taxation. And so ET is a gap down, close up. To me, that's a piercing line or a bullish bounce. Even though we don't have the volume there, I do like this as a potential bull flag where we could go from 17 to 20, which means we're looking for about a $3 move above 19.15. XOM, same kind of Harami, a little bit lower. I'd want to see confirmation on this. But if we can get through this high, this could be defensive of the low, and we could be looking for a move back to 122. That'd be a $7 move, and about 5% in XOM. Oxy, I'm just going through quick. The ones that meet the conditions, higher volume. Oxy is still free falling. Let's not buy into that one. But KMI has given us an amazing bounce, a close higher, some of the highest volume, even though we're not even at average still, some of the highest volume we've seen in the market today on KMI. Solid bounce. Now, if we're doing the same moves that we have in the past, we rallied from 22 up to about 25. We pulled back. We rallied from 24 up to 28. We should be looking at a $4 or $5 move up, which means I'm targeting $33 here, which means we really could be looking at a 15 to 20% rally in KMI. Normally, I would go to another one first, but Schlumberger is still slipping, and we want something that's giving us some value and some upside potential. BP has officially not broken the bearish trend, meaning that we've had lower highs, lower lows through here. Whether we want to define that trend in conjunction with a long-term line, or if we want to simply look for higher highs, higher lows. I would like to see it clear this level, but right now I'm just looking for a move through 29.90. If we can get through 29.90, I do believe we are going to go back and test 33. And this is stabilizing. There's not a lot of risk with this one, and again, they have good cash flow and they look promising from a highly discounted stock that could run 5, 10, even 15% and get all the way up to the area where we're talking 20% recovery all the way up to 36. And I'm going to throw one in here that's outside of the consumer discretionary and energy, and that is Coca-Cola. Coca-Cola has given us a very interesting higher low, large inside day that would only need to move above 63 to give us higher lows. That sets us up for higher lows, higher highs. And I do think Coca-Cola, who also has positive free cash flow, could easily return back up to fill this gap from last earnings all the way up near 70. And so we could be looking at another 10% rally in Coke, and they are obviously one of the big dividend players as well. They are a dividend aristocrat, and we could see some real strength in Coca-Cola over the next few months. All right, join me tomorrow morning, though, because Brandon and I will be talking about non-farm payroll, average hourly earnings, and really what to make of all this light volume and everything that's going on in the market as we're trying to push to record highs. So join us in the morning. Otherwise, have a fantastic night, and we'll talk again tomorrow.